Good morning, everybody. Hey, welcome to Wednesday, March 18th. Yesterday, we had a green day. Today, kind of that way of looking like it's going to be a down day to start the day. We've already hit the circuit breaker in the futures today. But before we get started this morning with our conversation with Dave, I did want to let everybody know that we're here. If you need anything, give us a call. If we can help sort this out for you, we're here to be of assistance to you in any way that we can. So, with that said, if like I said, if we can help in any way, please give us a call, 863-382-0037. If there's anything that we can help you with, anything we can walk you through to help you better understand what's happening in the marketplace today. And uh, and then looking forward to our conversation with Dave today. Not much in the way of earnings, but we'll find something to talk about. We always do.
Carlos Deep Santana, along with Rob Thomas from Matchbox 20 there. 8:40. It's 20 before 9. Time for the daily epidemiological update. Well, it is what seems to be affecting your money most lately. On the stock market, let's check down with the offices of Statler Financial Services, where Phillip Stantler is standing by. And, well, it was a good day yesterday, Phillip. The Dow was up by 5.25%. NASDAQ was up by 6.25%. And Standard & Poor's was up by 6. It's almost a fait accompli to be able to say it's probably not a good start to today after a good day yesterday, right?
Yeah, can you say give back? Give me back. That's what today looks like. Give me back what I made yesterday.
Yeah, sure does look like it. I mean, one thing that observation hit me about a couple of hours ago. Those of us that grew up in farm country have heard the phrase "up the limit, down the limit" because commodity prices and agricultural commodities are pretty volatile. So circuit breakers blow all the time there, and there's limits for how much the price of corn go up and down in a single day. So when I hear market reporters saying "up the limit, down the limit," I kind of shrug and say, "Oh, okay, it was semi-usual." Consumer investors are suddenly learning what the limit is. We've blown more circuit breakers in the last week on Wall Street than I think we probably have in pretty much the 10 years before that. It happened again last night, right?
Yeah, it did. We are seeing the circuit breaker break and halt trading. It's becoming definitely more current and more common this last 5 to 7 days for sure.
All right, guys that deal in corn, beans, and oats are kind of used to hearing that phrase, but stockbrokers that make their money on the consumer market are, what? The limit? You and I weren't even really 100% sure what the upward limit was a few days ago because it just hadn't even crossed our mind as being something that had happened. But darn, we've seen it happen, and we blew the limit on futures trading about 2 in the morning, it looked like, because the futures market has been flatlined since the middle of the night.
Yeah, it has, and it's it's bounced off of that low, obviously, but still, I mean, it's all red today. We've got the VIX, getting back up close to 70 again. So it's it's going to be one of those days again today. And I was reading something that said, what we're seeing is lower lows, lower highs. We're not making up for the losses that we had last week yet. So there's still some room, I guess, for this thing to go down some more.
Yeah, the numbers are in bear market territory. The question is how long the bear is going to last. And I've noticed that, what we give back, it seems to be, what we take back seems to be less than we're getting back on the up days. So it's not been a fun period of time. To bring people up as far as what's been going on the news cycle for the last 24 hours, latest presidential press conference endorsed a basic check writing payout for Americans who are going to be penalized by the employment situation. That means you very well could see a $2,000 check in your mailbox within the next couple of weeks. But Wall Street's reaction to that has been basically the same as Wall Street's reaction to the interest rate cut. And it's almost like an editorial statement from investors saying, pour the $1 trillion into research to make this thing go away because it's not a money problem. It's a confidence problem at the moment.
Well, on Wall Street, it is a confidence problem, but it's not going to take too many days before it becomes an economic problem when all these bars and restaurants start having to lay people off. because they can't work. They have to close.
Absolutely. Yeah, I'm not
So,
saying that's not necessarily my editorial point of view, but
gotcha.
it sounds like what the money is saying anyway, isn't it?
Yep. And let me remind folks that remember the last time we got a check in the mail, right? It was in advance of your withholding out of your paycheck. So don't be surprised if you end up having to pay some of that back when you file your tax return in 2020. Just, I want to put that out there so people don't think it's truly free money. I mean, I haven't seen the details yet of how it's going to be made up, but the last time we got this free money, we had to pay it back. It was a credit on your tax return, and so you end up having to pay some of it back.
Absolutely. And folks do need to keep in mind, even if it's not in advance this time around, some of the Democratic proposals out are for multiple payments. They almost certainly will. And even in the best case scenario, people remember this is going to be taxable income at the absolute best case scenario. So don't plan on being to spend 100% of it.
Exactly. And so I think there's some things we need to be concerned about in terms of what does this really mean. I think that I think you and I can probably agree that at this point it looks to me like our economy is going to be shut down for all intensive purposes for the next 30 days to figure out what this virus is going to do. I mean, we're seeing the bars. I read this morning Las Vegas, Nevada has closed all casinos effective, I think, today. I mean, they didn't give them much notice. It's like, boom, here's a notice, close. And so, you're talking about mass amounts of people that are going to be displaced when it comes to employment.
Yeah, absolutely. It's going to be it probably isn't even an overstatement to say the economy's going to shut down for 30 days. We're pretty darn close to it around here with all the attractions up in Orlando and Tampa be shut down. All of Legoland shut down. Our bars now are going to be closing at 5 p.m. in the evening. And a lot of them are basically saying, "Oh, to heck with it," and closing, period, right now for the duration. There's a lot of people that are going to be hurting. Our economy is going to be hurting, and those stimulus payments direct to taxpayers, as you say, we don't know from what source they're going to come, but they may very well be necessities for a lot of people.
Yeah, that's so true. And I saw Mnuchin say that basically, if they don't do something, you can expect 20% unemployment relatively quickly.
Uh-huh. Exactly. And that's all ending up getting more than just a shrug from the futures markets this morning as it goes. You got an economic report that I missed coming off the wire this morning, don't you?
We do. We have housing starts. They're expected to come in at 1.5 million. They actually came in a little better than that, almost 1.6 million for February. So good sign there. Obviously, at that point, we hadn't seen the full onslaught here in the United States of the coronavirus. So I'm not sure exactly how that's going to impact housing starts. Um, I'm sure it's going to help curtail them, and it may even slow down the process of finishing the houses that they've started.
I was going to say the starts are one thing. The actual sales and the finishing project are really going to be the interesting part over this 30-day period here.
Yes, it is. It's going to be interesting to see how fast they can get back, because I know there are several sites that are basically they're curtailing construction. Right, we don't want people out there working in construction sites because they're in close quarters with each other a lot of times, especially those specialty trade people. My daughter-in-law was saying she works for a construction company in Tampa, and they're basically closing down some of their construction sites.
Absolutely. Manual labor has got to be one of the close quarters occupations you definitely are going to be a little bit looking askance at.
Exactly. So we'll see what happens. It's going to just add to the slowing of our economy, um, and I think that it will probably throw us into a slight recession. How long that lasts, I think, will depend upon how fast they can get this thing turned around, how fast the virus spreads, and how quickly we can get that uncertainty under control.
Understood. Looking at commodity prices and expectations on that, when we get to that, the price of crude oil tends toward being expectations on business, and it's falling like a rock this morning again, which gives us an economic expectation as well. Couple of companies out, they were actually household words reporting their last quarter. Not that's going to affect the markets any, but a couple of bits of good news, I gather.
Well, they were kind of a mixed boat. We had FedEx come out. their earnings were basically in line with what the analysts had estimated them to be. Revenue, though, did exceed the forecast. And of course, like everybody else, they've suspended their 2020 profit outlook. They're just not sure what impact all this is going to have on them. They are still trying to cut costs. They're going to be down today 3.6%, after being up almost 5% yesterday. So, and that's in line with what the markets are doing right now. They're down a little over, they're down almost 4% this morning. So they're in line with what's happening in the overall marketplace.
I was going to say FedEx almost sounded like it was beating the market looking at what we're at. I got to assume that some of the transportation issues like FedEx, UPS, and the like on the short term might actually benefit from people staying at home and ordering by mail instead of going out to the stores in cases.
Well, I think it will. They will benefit from that because more and more people are gonna be ordering stuff. Now I see Amazon's basically limiting what they are going to stock now and ship out for the next, I think, week or week and a half. And so that's going to be interesting how that plays out. The other earnings report I have is from General Mills. They did beat by a penny a share. Their revenue, though, was the opposite. They missed what the forecast was. And just like I said, like everybody else, they're basically not giving full year guidance because they have no idea how all this is going to impact them. They had a good day yesterday. They closed up almost 12% yesterday, but they're giving some of that back this morning, down 3.75%.
How can you think of the worst nightmare to be a CFO in a company trying to give guidance at a time like this?
Yeah, you really can't because there's just so much uncertainty that just limits your outlook. You have no idea what it's going to do to you.
Absolutely. If we don't know, imagine what the person who's trying to guess what the consumers are going to do and a multi-billion-dollar company is doing. Well, yesterday, as we mentioned, it was an up day, and we've been alluding to it. How far down are we going with the major indexes 45 minutes before trading begins, Phillip?
They're better than what they were earlier this morning. The Dow's down 4%. That equates to about $833. The S&P 500 is down 3.7, $92. NASDAQ's the worst of all. It's down almost 4.5%, $330. So everything's getting smashed again this morning. If we look at commodities, they're getting beat up today too, Dave. We got silver down 2.5% to $12.18 an ounce. We got gold down 1.5% to $1,503 an ounce. We've got crude oil down 8.2%, $25 a barrel right now. And they say we could see gas. I read this headline. We could see gas below $1.
Wow.
I can't remember ever. I mean, when I was in high school, it was less than $1. But I mean, since then, I don't know that I can remember it being less than $1.
I was going to say, I'm older than dirt. I remember it at 26 cents a gallon, but that was a long, long time ago. I mean, I don't think it's been under $1 a gallon since, well, at least I got out of college. It's been a spell, hasn't it?
Yeah, it really has. So it's going to be interesting to see how that plays out. I'm just now seeing it, though, drop below $2. I mean, the station down Hammock Road that I pass all the time still was at like $2.15, I think, this morning.
That's amazing. It really is. The overseas markets, everything's off. We can probably guess at that. The Asian Rim markets all closed down. The Hang Seng in Hong Kong down almost 5% at the early morning hours this morning. British and German markets and the European theater are pretty much following suit. They're down between 4 and 5.5% as well at this point through their day. Phillip, this needs advice. Everybody, even if you've never contemplated the need for an advisor, probably ought to get a neutral look at what you're doing investment-wise right now. How do I make an appointment with you?
Then give us a call at 863-382-0037. Just want to remind people that, you know what, we're here to answer your questions, to help you through this process, whatever that may entail. And so keep that number handy. We'd love to talk to you and see if we can at least give you some perspective. And then follow us online at statlerfinancial.com, and then join us every weekend for the Statler Financial radio show, 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on News Talk, 7:30 a.m.
And we will be back again together tomorrow morning here on Light FM. And if the rhythm follows, we'll have a green day tomorrow. Maybe, right?
That would be nice, Dave. I'm looking forward to seeing that. Have a great day, and I look forward to talking to you again tomorrow.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I'm serious. If you have questions, concerns, that's what we're here for. Give us a call, 863-382-0037. Let us give you some perspective on what we think is going on and some things you may need to be doing. So have a great day. I look forward to speaking to you again tomorrow.